It's been the second day. So we have up to now we have discussed some areas. Now let me quickly go through the areas we are going to cover. And then the first uh, introduction on the competitive forces, how it affect the credit business, credit industry analysis, and the impact of pre-COVID-19, that is the pestle factors to your credit business, and post-COVID, that being beyond between after March, what happened to Sri Lankan credit businesses and how it impacts. So these are the areas we in fact discuss. I was going to discuss um, today, right? And some of things we have already discussed. Now, just to see what we have discussed last week, right? You can, the people who joined today, so you can just go through the last year's recorded version and get some idea, right? And what we discussed in last week, we discussed what a financial institution mean and the key credit functions of those financial institutions, and what are the factors will drive your credit business. And in today's context, what do you think in Sri Lankan credit business, not only Sri Lanka but in the worldwide? And what sort of challenges these credit managers are facing today in meeting their targets and meeting their uh, objectives. And then we discuss in a greater length the what are the three fundamental questions any credit manager today need to face, right? That we have discussed. Where am I credit business today as far as the bank is concerned, or my division is concerned, or my branch is concerned, and how I bring my credit business to the next level, maybe next 3 years time, maybe 1 year time, 2 years time, like that. And then the third questions, how to be there. So we discuss all these things last week, right? And then we further discuss the competitive forces affect my credit business. Now, for that, we use the Porter's five modes model, and we discuss who are the major players in the market. That mean the number of banks in Sri Lanka, financial institution, microfinance companies, and things like that. And also we discuss the fintech. We discussed a little bit of fintech threats come into the creeping into the credit business or banking credit business in Sri Lanka. And also we discussed the power of our suppliers and customers, right? And the impact of them for our credit business. So those things we discussed in detail last 4 hours. You can just, as I told you, log into the previous record version and just go through and get an idea, right? Get an idea. So then we discuss further the credit business, the credit industry analysis. And there, of course, we discuss why assets are important, right? Sri Lankan banking, what is the asset base, how asset is consist of financial institution asset base, Sri Lankan financial market asset base, in banks wise asset base, right? How assets are contributing to the business growth, and then as a loan and advances, sorry, as a loans and advances, how they play an important role in asset base, because Sri Lankan banks are categorized, so World Bank also categorized, World Banks are also categorized based on the asset base. So main contributor to the asset is loan and advance. That is why we need to improve your loan and asset. Not only that, and it provides the profitability to organization and things like. And then we discuss what is the total credit market in Sri Lanka. It's something around 8.8 trillion market. That is our market. So we discuss who bearing major portion of that credit market value of around 8.8 trillion. Who bear a larger portion in Sri Lankan market, right? And all things we have discussed last time. And then what we are going to discuss today, basically, now, so the impact of pre-COVID-19, that means so 2019 and also up to somewhere in 2020 March before this COVID took place, right? So what is the Sri Lankan economy, right? How the legal factors impact your credit business, right? Now, all things what we have discussed pertaining to the credit business. Now, sometimes you feel what is the relationship about economic factors to credit? Now, while going through your study and going through a lecture, and then you may be able to identify how important these economic, legal, political, social factors are impact your credit business, right? And also we are going to cover today the impact of post-COVID-19 to the credit business, and that is we are discussing what are the implications for banks, right? What are the implications for banks because of this COVID and beyond that? What actions the government has taken, what action the banks has taken, like that, and how we address all these issues, right? Okay. Now, that is the area we are going to discuss today. So, started with that. So, once we complete today's session, so we have another session we discuss about credit product developments and things like that. That is next Sunday. So, by end of today's session, so what you need to gain and to figure out how the pestle factors impact on credit business and the implication for banking credit, right? Now this is I am not just going to discuss about how the pestle factor impact to your when you're granting a loan. You need to look at the pestle factors of the organization. That is not what we are going to discuss, but we're going to discuss the external environmental factors, how it's going to impact your credit business, right? Okay. Now let's look at it. The first one, right? And that's we discussed last time also. There are some credit principle. Now one of the C, as I explained you also last time, the condition. Now you see how the five C's. One factor is an environmental factor. So that is why every credit officer or manager need to know about these environmental factors, because it provides for you to take a good quality decisions about the credit, right? So on that ground only we studying all these environmental factors. Right, now let's start uh, with the economic factors. So Sri Lankan economy and how it impact your credit business. Now, we all are aware that we are living in we call this a newly technical jargon, we call them as a VUCA business environment. Now, what do you mean by a VUCA mean? We mean volatile, U mean uncertainty, C mean complex, ambiguous. So, the business environment is today, or some people are called VUCA, or somebody. So, whatever. So, VUCA is a technical now jargon, or I mean the buzzword we are using. So when we conducting our businesses, so we are in VUCA environment. So that means everything's keep on changes. It's a volatile, uncertainty, complex, ambiguous environment. Now, based on this environment, the World Bank classify Sri Lanka. Just to get an idea about it, we need to know an overall picture, right? Uh, Not only this is good for you, not only for credit, but for your normal knowledge about the present banking environment, right? Okay. Now, usually the World Bank classify countries, the world countries, based on their per capita gross national income, that is GNI, into four types. One is low income country, lower middle income country, upper middle income country, and a high income country. So that we call advanced countries and things like that. The Sri Lanka, you think under what category Sri Lanka is falling to? So that is a very strategic thing happened very recently. Sri Lanka moved from low income to lower middle income stage. stage in 2000, 1997. So we moved from low income to lower middle income group, 1997. Then from uh, from the low middle income group, we were there till 2019. That means almost maybe 12 years we are in that lower middle income category. But then in 2019, so we were upgraded to upper middle income country, right? Upper middle income country. That there's something significant when you moving to upper middle income country. So these donations and getting free loans, concession roads loans, and all from other countries are limited. So there may be some restriction for that. That is why one way is good, one way is not good. But unfortunately, maybe during the August 2020, so even though we have upgraded to lower middle income to upper middle income group in 2020, in 19, but 2020, August, last month, right, we have back again putting them to lower middle income category. Right, so a very sad part of that. Now, still, we are going back again to the lower middle income as far as the economic concern, right? Now, they may look at it some factors, how you categorize to become the next level of economy, maybe due to unfavorable demographic factors, inefficient financial market, then the low level of innovations, weak industry and inefficient labor, and all matters they are going to consider. But anyhow, now we are back again lower middle income category. So you need to know all these things. Now, if you really look at it in the snapshot of the Sri Lankan economy in during 2019, now I am referring all this in 2019, right? All this thing is 2019. So what happened? SDFR and in economically, we have a lot of indicators. Very well. Now, say for an example, human development ranking. We have indication also. Converse are having indicators. They have indicated for different countries for doing business, and then literacy rate, social indicator, power by headcount index, global competitiveness index, and things like that. There are so many indexes. But if you really look at it in that sense, within the region, we are not bad. We are not bad, honestly. So that means we have a positive factors. So all positive factors, I will explain to you later on how it contributed to the credit business, right? Okay, so let's look at it now in, I'm referring to 2019, right? What happened Sri Lankan credit business? Now we have SDFR in 7-8%. Now GDP is 0.7, 0.3 in overall deposit. And debt to GDP ratio is 8.6, 8.8, and things like that. Okay, and we have a gross official reserves also comparatively 7.6 billion, and things like this is what happened, and this is the 2019 figure. And in fact, we have experienced that 2.20.2 trillion, the total asset market during 2019, but we discuss is 20.5 today. As at 2020, we discuss all these things, come to around 20.5, and inflation is going, but economic growth rate also, even though we targeted 3.3 according to the central bank in 2019, but we end up with 2.3. So that is the Sri Lankan economy in a nutshell, right? And you see, what is the total value of the Sri Lankan economy? The Sri Lankan economy, we have around, it is around 84 US dollar billion market. Now, some of the some of the bank in other countries having more than the Sri Lankan economy, right? Now, this is the total value of the Sri Lankan economy, right? 84 billion, right? Now, you see from 2017 to 2019, the GDP also coming down slowly and slowly. Where if you look at some other countries, like in even for Bangladesh, so they are more than us. So that is the thing we need to look at it. So the GDP, of course, we are going little I mean, the per capita income is little going up, but this is the situation, right? It's a nutshell. Why all these problems? Because we have high debt deficit and trade current deficits, and weak governance structure, and there are a lot of factors contributing to this. Now, what I want to, I'm again keep on telling why I'm explaining all this. Mind you, this is a you need to understand and forget about your credit business. And as a banker, as a manager, as a executive officer of your organization, you need to know the situation of the country, right? You need to get an idea about if the country is doing well, right? Only the business is growing. The business is growing, we can provide more loans. Now we need to look at it when you're planning our targets. We need to take into account the economic factors, right? Now, if somebody asks from you, your brother or your younger brother or sister asks from what is the Sri Lankan economy, if you don't know, you're not supposed to be there, right? That is why we need to learn all these things. So at the moment, we have around 84 billion US dollar billion mark. That is my total market. Okay. Now, if you really look at it, the inflation rate, one way is good because from 2014 onwards, the country or central bank in a position to maintain one digit number inflation. So that is a plus point, right? As far as the management of inflation is concerned, right? So you need to know that also a little bit. Now let's look at how the world global growth. Now, why we need to worry about the Sri Lankan growth? Why we need to worried about the global growth? Because as man, if the world is growing, so we can send lot of uh, item exports to a lot of items. So then we need export loan, pre-shipment loans, a lot of loans. And the business also growing, we will import, and then we have a opening LCs, then pledge loan, trust is all business loan, business will activate, right? Now, what happened to global growth in 2019? Now, when you compare with 2018 and 2019, now there won't be any corona during that time, but you noted that there may be world economy growth is declining to some extent. Now that is due to the power struggle between two major giants, America versus China. Now we also have some more problem. I will little explain on later on. And issues about not only they put some ban for China, and they put the companies who are operating in Sri Lanka also have some problem. Now we are as a middle income country, we have to sandwich between these two giants. Okay, and then the political tension during that time in Sri Lanka as well and in the world, and that economic growth is 2.9%. And when you are compared to 3.9 economic growth in the world economy growth, right? Now 2.9. Can you remember after 2007-8, this financial crisis, the economic growth further also became around minus figures, right? But after that, they slowly recovered. Now, the pandemic play an important role to further reduction. But anyhow, I'm referring only for 2018-19 time period. So where there is a 7.7% drop in economic growth in the world. Right. Now why we discuss all economic factors? You know, right? In order to boost any economy, right? So credit expansion need. The credit expansion boosts the economic growth. Credit contraction reduces the economic growth. Now you see how the credit contributing to the economic engine, right? So uh, basically the borrowing increase, right, is improving or increasing the economy. So credit has a direct relationship with these economic factors, right? So you need to take into account that. Now you see the contractions in credit rate for the GDP relationship. Now from the figure you noted that the how credit contributing to the GDP growth, right, is increasing, right? It's increasing. Now, if you really look at it in this further analysis in this, now because the credit as a percentage of GDP, at, and which is an indicator of financial deepening of the economy. What do you mean by that? That means the percentages of credit from GDP, which tells to what extent the economy or the system in the financial and going to the fine-tuned places of the economy, right? And but unfortunately, we have some uh, 2018, and that was not increased, not because of COVID, but this is not much expected amount. Now, if you really look at the domestic credit, if you look at the Sri Lankan economy from 1960 up to 2020, right? Now, the contributions of domestic credit to GDP in 1960s was estimated around 35%. Now, from 1970 came moving to the 45%, and 1980 is moving to 53. And from 1980 to 1990, there's a huge jump in contribution from credit to GDP. It is around 27% jump. For the next 10 years, now in 1980 is 43, but in 1990 is moving to 79%. Right? It's 79%. So now from 2000 it goes to 80, and then is 2010 is 92, and now 2020, and now it's around 90%. So you see how credit, domestic credit contributing to GDP, right, is a huge amount was increase in the country. Right. And also you look at in when you are compared with this private sector credit to GDPs compared with Sri Lanka and other countries who develop in the same level we were there in some time. But now see what is the contribution. But you see in Thailand, look at the Malaysia, right? Thailand is around 120. Malaysia is around 113. Vietnam is 133%. So that means the credit considers to be engine of growth of these now so-called developed countries when you're compared with other people in the Asian region. Now see the Vietnam. Now Vietnam also started with their businesses with agriculture, and they move into the industrial products, and now they are in the number. Why? Because the banking sector provide them a better loan, better credits. That is why the economy is growing. Okay, so remember that how credit can be contributing to the um credit can be contributing to the economy, right? And also then look at the non-performing loan and the GDP growth. Now, that is another important thing. Now, if you really look at it, in non-performing loans versus GDP growth rate, the moment the non-performing loans is going up, that means GDP is coming down. I mean, there's some relationship. Now, if you look at it from 2010 to 2019, and there's a correlationship between GDP to non-performing. So that means if you have a non-performing loan, the economy is not doing well. That's the indicator. So that is some sort of a signal we in a position to get, right? So these are some of the food for thought for you to understand about the Sri Lankan economy, right? And this is in 2019 before COVID, right? Now we will discuss the impact of all these factors later on, right? Okay. Now let's look at another important factor is what you call social cultural factor. Now that is another important area we need to understand, right? Socio-cultural factor, how that factor impact the credit business. Okay. Now let's look at it. I know you know what do you mean by social factors, and there may be a factors called demographic. Demographic means study about the population, the lifestyles, social mobility, the education level, the attitudes and likes and dislikes, and all are contributing to the social cultural factor. Now, and that's the important thing, we need to study this also little carefully, right? Now, for one factor, if I take the one factor now, say for an example, we'll take one by one. Now, we have some issues about this democracy. Why? So our workforce need to be prepared for future challenges. Now, if you really look at it, if you analyze, right, we have high level of educated youth unemployment, right? Because now that is why the government was initiated certain things to give jobs to the university students and the unskilled people to skill it, because we do have a large portion of unskilled workforce also. Remember, but we have a two extreme corners. One thing is we have a very good educated young, but less than, I mean, no employment, unemployed. And also we have another set, unskillful labor, un low skill or unskilled or whatever, called low skill workforce. And also we have another sector we call unemployment and female labor participation is not enough. The woman participation in a labor participation is not enough, right? Now, see some of the social cultural factor, right? But now, if you really look at the China, Taiwan, even for Vietnam. Now, why those countries doing well? Few factors. They converted this unskilled to skilled, and there may be a lot of female labor taking part in the economy. Now, what our women are doing, they are also contributing, but they're at home and do their homework for cooking, looking after, and all sort of things, but effectively not contributing to the economy. But other countries, their contribution is very high. Now, that is why it is important for the credit. That is why government and also the banks, there's a mandatory. Now, even though you don't know, according to the central bank direction, there are 5% of your lending need to give it to ladies. I don't know whether you are aware, like credit agriculture, you need to allocate 10%, right? For ladies, you need to allocate 5% of your bank uh, credit portfolio. So central bank now may going to look into that again, but there's a direction. And you see, that is why how you bring these unemployment ladies into the scheme. So credit, we will discuss some slide later on, how you can use it. Last week we discussed how much of ladies using illegal sources of funds. So therefore, they were never can come to the big scale, right? And you look at the generations today, workplace and the market generation. Now they expect we look at it. Right now, this chart will tell you the people who are born in these periods uh, uh, are called. Now, baby boomers, I don't think now, no, not much in banks, but there are some ordinary people like me are there, right? But majority of people may be in the Gen X category. And there are some people in the millennials. This is the workplace. And these people shows different characteristics. When you're delivering credit products, now as a employee, now we look at it this classification generation in two ways. One way is a workplace. Other one is you need to look at it from the customer's point of view. Right? If you take the workforce, majority of your bank now are from Gen X to Gen Z. Right? Gen Z to Gen Z. But some state banks, some are having the baby boomers also. Now, why we need to know all these things? These people who are born during this period, we call them as baby boomer, Gen X, and they have a different characteristics, right? And because we look at it from the customers, right? Now, how you match workforce with the customers? The credit we need to offer to the customers, right? So we need to understand that point as well. The workforce also changing. And if you look at it from the credit products concern, now there was a research article, they explain these millennials and all may not much worried about getting a housing loan or things like that. Now what happened in Gen X time, so once the moment you want to, when you come to a maturity stage, uh, what is your first thing? Get a housing loan, right? Get housing loan. Because you are going to marry, you need to have a house. But therefore, bank opportunity to provide them a housing loan. Now, these millennials and Gen Z, it was estimated that they are not much interested about housing, get a housing loan. They have some other agendas. They want to, come to the ladder very quickly. They want to go immediately to become a credit manager. They don't want to stick to credit officer or somebody. You want to cut other buggers who anyhow want to come to that. That is nature of the characteristic of the people. We can't blame these guys, right? And the requirement of these guys are changing and providers also changing. So we need to understand that, right? We need to understand that. Right, we discuss about the credit culture and we discuss about some of the motives, right? So you see now how these employees and customers who are falling into different categories basically. And also another important factor before I move it to now, in Sri Lanka, we have an aging population, right? Now, according to the gained estimation that 2040, and we have a peak, that means we have a good crowd of people who have a potential, I mean, productive people around 2040. And also we have estimated by the World Bank and the Census Department that figure, which the elderly figure, were in 2015 is around from the total population is around 13%. But in 2050, maybe another 30 years time, it's going to be double. That means the majority of our labor force may be unproductive. That means the contractions of the labor force. We don't have people to do the job, right? Because of that, the lower productivity and it's a fiscal burden to the country. Why? Because we have a free health. Because we need to spend more money for health. That's a fiscal burden to the country. And also we must have a higher retirement cost because we have to look after them. And elderly cost, all things matters. So remember that. So therefore, so we need to look at all these things. That is why we need to understand what is the Sri Lankan situation as far as the social front. Now, I'll tell you as a business point of view, right? And labor force squeeze the informal sector. That's not a bad one. But if you really look at it, access to the financial, as I told you, still as I told you, there's no in the world, this is in the world, 200 million micro, small, and medium enterprise, no access to, to grow their businesses. That is why we need to support them. Now, if you really look at it in this figure, and this is very sad. What is that? So Sri Lankan, about the Sri Lankan employees around 230,000, which is about 2.8% of the total population. Right? So some sort of a business guy represent. Now, this 2.8% of the working population try to feed entire other population. Now, you look at the 75% of all Sri Lankan enterprises are categorized as SME, according to the, that is not only the Sri Lanka, other countries as well. Now, if you really look at it from the so-called countries with the same line some years ago, now they look at it in Vietnam. You see, 19.6% of the working populations are businesses owners, employed. Thailand is 27.5. Now see, what is our percentage? 2.8%. Now how can you bring from 2.8 to that level? Now country cannot live, provide them better SME loans. Right? Even you take the countries like Bangladesh, also more than us. Right? Other countries also 10%. So then what is expecting? So we want to develop SME. That is why any country, any government come to power, they talk about SME, but the talk only is like a NATO, no? Talk only no happen. But this government may try to do something, and that is the who need to execute that strategy? The banks. Now, how can you convert these 2.3 to 16, 10 people by giving them a SME loan? Now, you see, we have an ample opportunity, right? So people say, no, we are saturated plan. No, we have to create the financial discipline. So therefore, enough market potential is there, provided the right product and the right price available to them. Right? So don't think credit is finished. No, there are ample opportunity. You look at it of these figures, right? And also, people are now talking about the gig economy. Right now, gig economy, they're going for a more rather than the government. Still, Sri Lanka, we want to go for government, but now people are just moving from freelancing, independent contractual working, so consulting. So now people are slowly moving to gig economy. That is not a bad. And also remember the labor market, right? Labor market. Now see, good example is Uber, pickup, pick me. You know how sort of a job they have created. There's an opportunity. The person employee mean what? Any person is employee mean he may go for a loan because he is financially sound to get a loan. So banks in a position to give some loan, right? Okay, right, uh, right. Now, up to now, okay, you understood, right? You need to know all these things, right? There's an opportunity, right? Okay, just to Danuka, okay. I'm just otherwise, I sleepy, at the bad time. Danuka, you are okay now. Up to now, you got the stuff, right? Okay. Then Dilshan, how about Dilshan? I just going through some people's name, right? Okay, Dilshan, you're okay, right? Thank you. So I can't go other people's, right? Okay, I will limit it to that, but doesn't matter. Just to get an idea about, and these things are important for not only for your credit, but also your other area. You see, we have ample opportunities. If somebody saying is no, the credit market is saturated, no, right? There's enough availability there in the market. Right. So let's now another important elements. Now, up to now, we discuss the economical factors, and then we discuss the social cultural factors, right? And now we are going to discuss another important area for banks, and that is the legal environment. Right? How this legal environment impact on banks. Now, you see, the banks are highly regulated. No any other industry regulated like this, right? So, no, we have a lot of you need to comply a lot of things. So, it's indeed a number one challenge for banks, right? So, we need to principally adhere to all these things and things like why we need basically there's a lot of regulatory frameworks you see from banking act from 1980. There are five times the banking act was amended, and I think end of this year or maybe latter part of 2021, so the central bank is proposing to not to amend, not to bring changes to the constitution again. So totally demolish the Banking Act 30 of 1988 and come up with the totally new Banking Act. That is what they are working on that, right? So not to make any amendments to the act, but totally new Banking Act they are going to come up. So wait and see, maybe somewhere in 2021 and think maybe latter part of this year. So there may be a possibility of introducing a new uh, act, banking act, right? So that we need to study again all these things. How banks are getting lot of directions, determination, notices, circulars, things like that, right? And some of the laws also there which covered all these things which banks need to be adhered to. Right now, let's look at it. There are many reasons why regulation pass for financial services, right? And if you really simply look at it, one for protect consumers. So because we are dealing with customers' money, so it is our duty or to the regulators' duty to look after consumers. Second one, to maintain the soundness of financial institution, right? We need to, because you know what happened if the one institution is collapsed, you know what happened, right? You have experience in that sense. Now, so we need to maintain the soundness of the financial institution. Otherwise, contingent effect, that means systemic risk also come in, right? And then there are a lot of risks involved because of that. Then what happened? The financial system stability goes down. People not trust the system. And also, uh, it is a duty of a regulator not to use bank for do criminal activity, right? Concerning money. So anti-money laundering, terrorist finance and things. You cannot use bank to send the money. Now you look at it last couple of months, you see how banks are used to dealing with money. Now there's an issue. There's an issue from police, one of the police person. Now, why banks are not looking to that? There are 300 million, 400 million, 1 million, 2 million transactions are done by an average person. Where is the KYC? Where is the CDD? So why all things blame to police? That's also one way is correct, no? So that means it's not enough. The regulation is not enough. Things like that is a question mark. So, but anyhow, the regulator may looking all these aspects. Now, classic example we discussed last time. We had around we have around 39 uh, finance companies, and we have around three leasing companies altogether, around 42 now. Earlier we had 46, now 42. Now there's a big issue presently faced by the regulator. Now out of these 46 financial institutions, maybe 20% or maybe 50% or maybe the 20 institutions, they are not good capital and liquidity. They have problem. Now what is the solution? Because they cannot afford to lose any financial institution. It affects the knock-on effect on the other institution. As a regulator need to look at it. Now the regulator may look at it, re-look at it, how we can consolidate. Now that was started in 2014 when the former governor, the present minister there, Mr. Kapral, about the consolidation of banking and financial institution. Right? Now they re-look at it. Now all this, what is consolidation mean? That means you may have merging and acquisition, not one institution. There are 4, 5 small institutions get together to perform another financial institution. Right? There are those problem financial institution. There are 20 odds. Their problem is finding out the capital and the liquidity. So what government or the central bank is now look at it to consolidate all these things. Put 5, 6 institutions together to one. So then you become more sound. So you have a synergistic effect. So you one way you protect the small financial institution. One way you build up the trust and confidence of the financial sector by from the public. Right? Now these things you need to look at it. Okay, just for something for food for thought, right? Now let's look at it. All these things impact on credit, right? Now the CBSL adapted several policy measures to bring down the cost of fund for the bank. That means if you bring the cost of funds down, so that means so the bank can give but better loans at a better rate. Now loans is the engine of growth we discussed earlier. And also reductions of policy interest rates and decreasing statutory reserve ratio. Now I am referring all these things which took place 2020 before March, right? During that time also the central bank, forget about COVID, there's no COVID during that time, right? And central bank has taken some steps and they imposed the market lending rate by reducing the deposit rates, and they bring down the credit card to 28%, TOD to 24. Now is different, but they have further reduced. I will explain to you on those things and later on, right? They have taken some action. They have taken some action, but despite the fact of all this action, the first quarter of the government is minus 1.6. Contracted by 1.6 minus. So that means the minus credit growth, minus economic growth, GDP. So that was 2001. So we don't have a minus figure, but the first quarter, right? First quarter is minus. We don't have a COVID. Taken all the steps. We have to look at it that aspects, right? And of course, from July we don't have a sliber. I don't want to explain that because central bank was decided to discontinue the sliber because there we have other alternative methods. No pointing having the sliber, and just for your information. And also central bank also come to we have a issue we discussed NPL last week. So central bank said to submit the recovery plans, right? Make it more disciplined, disciplined financial customer. So banks requested to provide the recovery plans. So some of the action taken by the central bank in that aspect, right? And also in order to strengthen the um, banking sector, and they have changed the minimum capital requirements, right? And I will explain to you these things later on, right? But before 2020, somewhere in 2020 March, and they incorporate all the banks from end of this year need to be um, minimum capital requirement is 20 local incorporate banks and 10 something like that, right? And this is the one, but this was postponed for 2 years because of this present situation. But that's a good investment. So capital requirement is important for a bank, thereby strengthen the bank. So those are the banks who are not having that amount, they may take a step to improve their capital by issuing debentures and things like that, issuing shares and things like that, right? So it's a good move to protect the banking sector, right? And also, they introduced the another things what you call SLFRS 9, right? SLFRS 9 is that mean, so we use incurred loan losses approach, but uh, banks are was requested to adhere to SLFRS 9 to unexpected credit loss approach. So all these things you are going to learn later on this course, right? Now that means you have to provide the provision the time you give your loan. So that means you have to allocate more provisions, right? So that means that impacted your business, impacted your profitability, right? So, but it's again a good initiative taken by the central bank, but that was again postponed due to this COVID case, right? Okay, then we know the Sri Lankan banks are categorized into domestically significantly important bank and other banks, right? So that, of course, it's a new way of classification of banks. Depend on the size, interconnectedness, substitutability, complexity, cross judicial activity. Based on these factors, Sri Lankan banks are categorized. So we discussed earlier, Sri Lankan banks are categorized basically based on asset base. That's the one thing. But this is based on the risk-weighted asset, right? So accordingly, we have say according to the Sri Lanka, I think these things also you're going to discuss. I don't know whether you are aware on this. Sri Lankan banks are basically categorized into two categories. One is significantly important banks and significantly not important banks, and they are also put them into three buckets, right? That is say we have a significantly important bank bucket A. Bucket A is basically we have HNB and People's Bank. So the bucket two we have Commercial Bank and Bank of Ceylon. But all other banks, well, with Sri Lanka, we don't have a bucket three category. Those are significantly important bank, basically based on the above category into three buckets. But we don't have a three bucket three category. Where apart from 14%, we need to have an additional 1.5 and additional 2.5. That means the capital adequacy ratio for bucket A bank is then how much? Uh, 15.5 and like that 14.5, right? And then all other banks are less than 14% asset base. All are goes as non-significant banks, right? So this is the new way of classify the bank, but that also reduct 1% by the banks. I will explain it later on. Okay. Then there's another important thing for a credit management. Very important things, right? The parat execution. You know, parate mean in Dutch term immediate sale, right? The recovery of loans by bank, special provision act. This is a very famous execution uh, procedure by banks, right? So that's a good thing for banks. Now, what happened? Now, the earlier we had any amount after 2011, 1 of 2011 Act. I don't know who has done this one. That Parat execution was increased to 5 million, right? And then there's another issue came. What do you mean by a principal amount borrowed? With the interest or without the interest? Right? So that Act number 19 talk about, so loan defined in the Act number 1, 2011 was further clarified as the principal amount borrowed. That means 5 million without having any interest. Now, and this case is okay, it's applicable and went smoothly. But now there is another issue came, right, because of this decision. This is Sumudu Sena's Sanjeevani Nanayakara versus HMB. Now, that decisions have some impact about this Parat execution. Right? That decision is talk about the judgment was given by Sisira Abru, Anil Gunaratna, and Nalintara, Supreme Court Justice. And they said the decisions given now, banks have a problem executing Parati. Now, what they are saying is what is principal amount? Right now, I just tell you the argument only, right? What is the judge's argument? Now, say there are two guys. Now, think about two guys, right? Just read this one date slowly. Huh? I think I have given you. Please read uh, this judgment. But what I want to explain now, think about the judge's argument. Now, person took a loan for 8 million, say for an example. Person took a loan as a principal amount as an 8 million. A person took a loan for 4 million, right? Now, imagine the two guys take two type of loans, right? Right? Okay, I'll just explain. Be careful. Just please listen to this judgment, right? This judgment have some problem now about banks executing uh, people who must be involving in this Parate must be knowing this thing. But just to get a clarification. Now, say as I told you, there are two guys. One guy is having 4 million loan. One guy is having 8 million. Now, this 8 million guy, right, is keep on paying regularly their payment. They keep on paying regularly their payment, right? Now, suddenly it's come to around 4.3 million. Now, from that point, the person is not in a position to pay there's some reason for not to pay these loans. Okay. Now, guy who took 4 million, he pays only one installment and their line is 300 and say 390,000, 3.9 million outstanding. Imaging situation. Now, we can't execute to that person, but we can execute Parate, the guy who took a loan for 8 million where he have paid is more than what that fellow is paid. Now it's unfair, no? In that sense, the guy who took a 4 million, because since is that law is not applicable to that fellow because of he have taken less than 5 million. The guy who took the loan for 8 million and paid and suddenly can't pay from 3 million, that fellow took a loan for 4 million and not paid even, maybe even a small portion, say 390,000, 3.9 million outstanding. Now we can't apply to him and bank can execute the parate for that person who took 8 million because the principal amount is more than that. Now, in that sense, so what do you think? What do you think, Danuka? What do you think, Danuka? Is a fair to that person, A, B? Huh? What do you think? Dilan, what do you think? Which one is better? Good customer for a bank. Guy who took 4 million and not paid anything, or guy who took 8 million and paid 3 million, we apply to him. Parate, not to that person. What do you think? Who is the good customer as far as you are concerned? Huh? Deshika, what do you think? Hmm? Who is a good customer? 8 million customer or 4 million customer? Now you see, there's an issue on that now, right? That is the judgment given on that basis. Okay, so you need to understand that therefore now banks having some small problem with this. If people get to know, definitely there may be a court at this case, right? Okay, so now this is the basic. So this is the rationale for that, right? Okay, so now that also now come into play for credit guys, right? Now I took certain areas only which are applicable to the credit business, right? I hope you understood that. Anybody you not understood, please tell me, right? Okay, you know the Parate issue now, right? So these are the things, but there are some banks having some problem now. How to implement this? You see now, you can't see more paper advertisement, no much about these. And one thing is there's a moratorium, but top of that also there's some issue on that. Okay, now we are moving to another important area where we call them as a money laundering, right? And you see, and how banks are using the by the illegal person to clean their dirty money. Now, how is Sri Lankan faring? Sri Lanka is good for that case or not? Right now, according to this, you see the globally, and they have identified around from the global GDP, around 2 to 5% money laundering are taking in place, right? And they take the fifth position. So huge amount of money laundering are taking place, despite the fact of all these issues, right? Now, for that, we have what you call uh, our, uh, our financial FIU, Intelligence Bureau. You know what is the core functions of FIU, right? Basically, receive report from the money laundering and terrorist finance forms or from financial institution and conduct analyzing using these information and take some decision and hand it over to the law enforcement people to take actions. Those things. That is the main core functions of FIU, right? So you know all these things, but you know in Sri Lanka, right? We are put into the grey list. So that means the country where can do lot of money laundering and terrorist finance act. So we have some lack of strategic deficiencies. So they have banned from 2017. Now, fortunate enough, central bank has taken some action, and then they basically from October 2019 onwards, for 2 years, they have taken that lift, the grey list from national NS Sri Lanka government. Right now, the moment if you are grey list, what happens? It is very difficult to deal with international business. So they charge us more premium when you do transaction. They ask more documentation. So doing business with Sri Lanka become cumbersome to that part, right? The importer in the other country. Why? So they are asking so many information. And also the European Union Parliament also were blacklisted on February 2018. So we are blacklisted from the, from the FATF as well as European Commissions. That means the countries in that banks, central banks in that countries. When you're dealing with Sri Lanka, that means you are open to subject to the more, but more on money laundering and terrorist finance. That means our system is not so uh, comprehensive to safeguard this. Then central bank FIU has taken initiatives and inform all your banks, all these transactions, grant loan granted to the PEPs, and lot of issues need to be taken into account. That is why they introduced the new CDD rules in 2016, cancelling the previous one. Right now, why? Because now from 2020 May, we have just taken out from the European Commission. Right. So in that case, so when you do credit business, also we need to look at it. Right. Okay. And then again, we need to look at it now. I don't want to explain this. And this is a good move by the central bank. And they introduce what you call customer charter. Now, customer charter, so people who are involving in the banking business need to sign, and that explain the bank's responsibility and the customer's responsibility when you are conducting the business with us. So that's I don't want to discuss. But remember, every employee of the banks need to adhere to the customer charter. When you're taking the appointments, or people who have work already had signed, you are obliging to the customer code, bank code of conduct or customer charter by signing like confidentiality, right? That's the important thing. Right. Then we have another issues about pertaining to the credit business, right? You had bad experience last couple of months ago, right? Now this is the what you call financial ombudsman. Now this is uh, the, the complaint received by the customers to the financial ombudsman. Now you look at it from 2015, these actual figures, right? 2015 to 2019, the complaint received to the financial ombudsman, right, from the customers are increasing. But honestly, that amount is not enough to my knowledge, right? Either something people are not aware about this ombudsman mechanism, or maybe we are very good one way, but they have noted that majority of these majority of complaints are coming or came from leasing companies. Majority of claim received from the leasing company. Now you have the experience, the recently one fellow died because of some issue, right? So we in a position to educate the customer about the complaining ombudsman procedure. Mr. Who is the present ombudsman? Is Mr. Anand Karunatilaka. That office is located at the Bajir Road, and you need to display that person's name in your branch. All things are there under customer charter, right? But remember that also central bank supervisory department and go and watch whether you have put all these things in the branches. Those are linked in credits, right? Most complaints are coming for credit complaints, right? Okay, so why increasing the complaints? Maybe sometimes you are going for a business target, you are given the number of loans to be achieved and things like that. So you are going for that. You are cheating customer, telling unwanted interest rate bribes and all sort of things. And then there may be inadequate training and not having the proper directions, not explaining the terms and conditions. That's the most important thing, and poor knowledge. And these are some of the reasons ombudsman has identified. why these complaints are increasing. But mind you, most of the complaints are coming from leasing companies pertaining to the leasing credit agreements, right? Okay, you need to know all these things, right? Now, this is the present, but it may be going to strengthen by the central bank in the future, right? So when you are doing credit business, also need to look at it that aspect as well. Now, top of that, we have a credit counseling center, and we have crib, right? You know what is crib, and you know the role of the crib um, for for lending, right? They provide a fantastic job for banks. So I don't want to explain much on this, right? And what is the main objective of credit crib is to create a conducive environment for people to obtain credit, right? And improve their, improve their credit worthiness. Now, customer can get an report and can show him here. Why can't you give me a loan? I have good payer, right? And that's independent institution, right? Provide the facility, the smooth functioning of credit business in Sri Lanka, right? It's a good, important, um, good third party body will support the credit business. Now, people who are involving in that, you have to send these documents, all the information about customers to there, and there are a lot of things are taking place about the crib also. Now, when you look at from the crib, some people put name differently, put the initial, first and second. There are a lot of people are smart guy also. When you look at the crib report, you can't see, but they have changed the names and put it in the Disanayaka Mudyanselage Disanayaka, and all. There are a lot of things. Those things our smart customers are doing. But you, as a good person, you you need to know how you are going to read the CRIP report. That also you need to look at it very well, right? I just give you an example how some people how you are misleading CRIP reports, right? So reading a CRIP report also play an important role. So that is how you evaluate your credit worthiness, evaluate your credit customer. And CRIP is not only provide that, they will support by developing what you call analytical part, credit scoring. They provide your credit scoring, then do some research, right? And so CRIP will facilitate in many ways to it's many ways to your bank, right? So therefore, reading and analyzing CRIP report also a most important thing uh, for a credit person, right? You need to know because there is a availability uh, in the market, right? And then also we have a, even though it's not mentioned here, we have a credit counseling center, right? We have a credit counseling center. A person who has some problem with pain, they can go to the credit counseling center, right? And get support from them. So those all institutions are there, mind you, right? But some people are may not aware on this. That means the financial literacy, even though we have a 90% of uh, writing, reading, literacy, but as far the financial literacy is concerned, not to that extent. I think it's around 25% in Sri Lanka. Still, people are believe what banks are telling, right? Okay. Now remember that those are some of the institutions. So that means legal play an important role in businesses. Okay, understood, right? I hope you understood how legal factors impact your businesses, right? So what do you need to know about all these things? Then we move into another important area. So that is what you call the ecological factors in credit business. Now, a lot of people are talking about green lending, green banking, and all sort of things. right? Now, it's another important area. Now, why? Why? Because of this. Now, the ecological environment, right? And people, a lot of people are considered planet as a bundle of raw materials, right? So we in the marketing we'll discuss, we define, and we need to look after the social aspect. In holistic marketing, we talk about the the natural environment, protecting of natural environment, right? Now, somebody can say, okay, the pandemic because of the ecological issue, right? Can't still not find out what happened, how it came, right? So you see the natural environment factors, one of the major issue facing bankers in current years, right? Because of this industrial waste, discharge of effluent emissions. Now think about our recent case in Panama oil. So imagine what happened, right? All fisheries industry may be going to impact. So the P bank give loan to the fisheries guys, so they have no fish to catch and a lot of problems. The fish market all can get impacted because of. You see the natural environmental factors, how important. Classic example in day to day today's happening in Panama, right? In that case, our guys are better. I mean, they do something. They are smart guys, right? Our guys, whatever said than that. Now, if you really look at it in the latest information issued by the Swiss Re Institute, so that is the global economic losses because of these catastrophic related losses, maybe due to natural disasters. Now, I want to tell you, this is nothing to do with corona, right? Without corona, only this happened. Now, this is the figure they have estimated around 75 now global economic losses, that mean we call global economic losses, right? Now, these global economic losses from the natural catastrophics, and there can be economic losses due to two things. One is for natural disasters as well as man-made disasters. Last year, right? So it is estimated in first half of 2020, you noted that it's around 75 billion US dollars. But in 2011, that loss has gone up to 450 billion. Can you remember why is that in 2011, right? Okay, 2017, right? Okay. So huge losses took place in 2011 because of that financial crisis and other uh, damage for earthquakes and things like that. Okay, now in 2020, it's gone from 75 billion, right? Roughly around 75 billion US dollar lost, right? Out of that, only insured covered only 40% of that 75 billion. So the insurance companies can compensate only around 31 billion, right, out of 75 losses. So you need to understand that this is 2020 figure, right? So I'm not in the position to mail to you because I have taken on yesterday this information, right? So this is Swiss Re Institute is the world institution who will take all this information in the world, right? And this is the catastrophic related losses, US dollar billion. In 2020, the first half, it's around 75 billion, right? And in fact, of course, if you look at it from 2012 to 2019, is not much, but that figure is keep on increasing. That means we as human being damaging the natural environment. Now, this is the figure you look at it, right? Uh, Man made three out of right 75 economic losses, and then Insured out of that is 31, that means around 40%, right? So why? Because insured mean is a cost. Remember, insured mean is a cost. So therefore, I just give you just information for you to understand, right? How much is economic loss uh, because of this, not considering this natural environment into account. Now, coming back to banks, now other financial institutions, as the fund providers and the loan providers to the organization, right? So you need to look at it this seriously, this loan. When you're granting a loan, right? And look at it, the seriousness, the what purpose you are giving. So you need to really analyze. The only issue is you're damaging, you're destroying the social well-being as well as you not in a position to get the loan back. Repayment problem, right? So therefore, you have to pay more attention to when you're granting loans because the environment is play an important role. So now, what happened? A lot of most leading international banks have incorporated the environmental risk into their integrated risk management system. See whether how many of your bank has taken the environmental risks into your integrated risk management system in Sri Lanka. Now, there are some of you all may be, I know some of you all may be uh, person, even though study advanced credit department, advanced credit diploma, maybe a person from your bank uh, risk department, right, or maybe audit department, right? Now, see to what extent the environment risk factor take into your risk management system. If not, you have to look at it. There are a lot of books available on that, and you can see how the environmental risk bringing to your risk management system as for and also for your credit evaluation system, right? Okay, so we are now development of green finance, right? And it is a pressing tool for global banking sector, right, to impact assessment of environment, right? And also to take some measure in response to the impact of credit risk of commercial bank based on the aforesaid assessment. Now, classic example, if you watch last few days, certain media conferences and some discussion and read some articles, and we also, Sri Lanka, we got to know. So, what are the precautions the Sri Lankan government has to take, especially loading and unloading, things like that? We don't have any BCP for that. And also, there are some fellows talking about there are so many vessels going along with our sea track, right? Just passing Sri Lankan border. Millions and millions narcotics, drugs, and gases, poison gases are transported. If something happens to one of these ship, like something happened to that, so where are we now? So we have to take care on that. And just an food for thought, right? That is nothing to do with the credit, but that is what then only we realize how important the environmental risks for the country in that case. So likewise, we have to take into account the environmental risks into my credit evaluation process, right? Okay. In as I told you, it is an important factor um, impacting the commercial bank, and also incorporate environmental stress tests into the bank credit risk rating system. That I told you. There are a lot of theories and a lot of practical solution process forwarded by or proposed by many writers, how you bring the environmental risk into your credit evaluation and the credit risk assessment process, right? Okay, so that's another important area we need to look at it. Now, why we need to consider these green issues? One factor is, as we explained to you, it is very difficult to recover the loans now, right? Assess value may be depreciate. Now, you may have a Ratu Paswala case, right? A bank need to have a responsible sometime for cleaning cost also. That means to give, you gave the loan because of you gave the loan without proper assessment. So that person who took the loan has damaged the environment. It, so your bank had without taking any responsible manner, socially responsible manner. Therefore, you have to look after all the consequences. That is the decisions given by United States versus Fleet Factors Corporation. So the United States versus Fleet Factor Corporations, the bank has to look after the other see other cost, not only the granting a loan or clearing everything. So what are the steps you can take to green issues, right? And review existing portfolio potential problems and take the initiatives in green issues and things like that. And mind you, right? And mind you, the present government may look at it these areas when the tourists are coming. Right now, I will just give you an example, right? And in order to reach the sustainability, the triple bottom line, that's concept developed by John, and say what he called that bottom line mean people, planet, and profits. We need to look after all these three aspect sustainability, right? Now, for an example, these Costa Rica, the country, right? The Costa Rica is a world leader in eco tourism, and we can take an example. We have enough phases, right? So Costa Rica is the country. So a lot of tourists are attracting to show their eco tourism, world lead in ecotourism. That's a good example in the world. So why not Sri Lanka also look at it? So for that, banks need to give them a loan. Give me a reduced loan, right? For using all these things. Now, the classic initiatives taken by government, these giving some loan for Surya Bala Sangrami or something, or Revi Bala loans or something, and those are the good things. The people who are going for alternative sources of energy generation must support, right? Okay, for that banks can give loan. So definitely, banks going to get some return. Now I know the national NTB, and then even for Sampath, they are having that loan facility, 5 year loan facility for basically for credit card holders. So you know how much of money these banks are generating because of that. Easy installment. Now, say uh, for example, one bank is giving 5 lakhs, right? Interest-free loan. Remember, interest-free loan, 5 lakhs deducted for 5 years. So it's a very concession rate because so monthly installment is come to them. If you look at it from 500,000 loan for 5 year period, payable in monthly installment, the monthly installment may comes to around some other additional operation cost and all, maybe something come to around for 9,000 not, say for 9,500 for example. Now, a country, a home who uses at least 300 to 400 units, right, through solar power, right, make use of that money to pay the installment and also get some money from the electricity board as an export, right? So these are the good things. These are the things. Unfortunately I don't know why these things are not much popular in Sri Lanka. Maybe due to some restriction from electricity board, maybe they don't want to give, but that's a different story. But government will try to give more free loan like that. Those are something we need to look at it as a green loans, right? Okay, right. Now we finish the social factors, and now we are going to discuss something called the ethical factors to credit business. Right now, let's look at it. How these ethical factors now, right? Ethics means a moral principle, right? What is the defined right or wrong behavior, right? In marketing, we call ethics. Now, say for an example, I'll give an example. Uh, Prostitute, for example, Sri Lanka banned, but some other countries is permitted. Married to the same sex, Sri Lanka, there are 14 countries like that in the world. If you want to marry another same sex, you go to those countries. The country who's recently got the permission, I think Australia or something, right? Okay, London also won, but then they lost. Mm. But it is illegal in Sri Lanka, no? It's Chia. But some other countries is okay. Now that is ethical as well. That is why it's very difficult to define the right or wrong behavior, right? But anyhow, businesses, right? You need to adhere to these ethical issues, right? Financial guys are very famous in unbehaving ethical way. Let's look at it, some of the issues, right? And one, especially in the corporate governance. So I think the first one, the creative accounting, right? I think you have learned about what is creative accounting, right? What is creative accounting mean? It's a financial fraud, and accountants are artificially or manually using their knowledge about the accountings and try to give a wrong figures to the users of financial statement. Inflated profits or maybe deflated, both way, right? Now it is then investors and think and they go and invest the money. People get debentures from them, but this is not a good bank. So creative accounting. Then we have a misleading advertising, right? So, you can advertise like without disclosing the annual effective rate. So, according to the central bank, every bank must put um, effective rate. Some banks are today talking about floating rate versus fixed rate for lending. 3 years floating, from 3 year onwards fixed rates. Some poor people don't know what is floating. Now they say they showed this time is very good. Now this is the time you go for floating rate. Why? Bank need to go for floating rate because the low interest rate. Why 7%, 8%? You see, everybody is getting 8, 9% loan, and this is a very good time for banks to advertise floating. But maybe another 2, 3 years time, the interest going up, and then you charge a different rate. The poor person may think he's going to get the same rate for entire loan settlement period. But this thing we need to communicate to the customer. So sometimes your advertising may be misled you all, not even giving you the ER or may not mention the difference between floating and the fixed rates, right? And sometimes mis-selling. So the person who's going to sell you a credit, because now I told you the credit guys was given targets, they are going to achieve the targets, so they won't tell the actual truth, right? That is mis-selling. And then the conflict of interest. The director taking a loan without disclosing some information and things like that. An issue of transparency, data protection. So you're using the political contribution to gain influence, right? So there may be a lot of issues taking place So you name it. Insider dealing, provide information, customer from the institute or mean the trading company to another party. Here we are going to issue a bonus share. Why don't you buy shares now? Based on the information given by the inside guy, investor or the share market person who buy these shares. But that information is not available to general public. That is what you call inside dealings and bribery. You can imagine now these days. So how narcotic guys and the other police guys are taken, become a millionaire of in this drug business. Nobody's find out from where you get this money, being a police officer. That is the bank side. That is comes to the banks. Now a guy is just a police officer. How can he have a money like this? So are we do a proper CDD or KYC? So that's a question mark. Every time they can come back to bank and say, have you found it? No, we don't worry because we want money. No, a guy took a loan for such an amount. How we are going to pay? We need to look at his other sources of income, right? And keep on paying installment. We are happy. Why we are never going to ask for where you get the money? Now, suppose a guy for a teacher, for an example, took a 30 million loan, anyhow he got it. Now he pay that is loan within 3-4 years. How a teacher can pay the loan installment, a big installments like that? We never go behind him, no? Why? We don't mind because as far as he's good customer for us because he's paying the interest and the capital. Why am I worried? So those are some of the issues and ethical issues coming into the scene, right? Think on that part also, right? Okay. Now that is the ethical aspect of businesses, credit businesses, right? Now we look at it. Uh, the another important area is what you call the technological aspects, right? Now, what we're going to discuss about the technological aspects, right? And the bankers are the heavy users of technology, other than these media guys or mobile companies. The banks are the heavy users of technical factors. Now, let's look at it. Now, technology is changing always. Now, as credit marketers have to be vigilant about these changes. Now, one example in banking, now digitalization is taking place. Now, we understood how important the digitalization in post-COVID-19. The bank who invested money for digitalization move in, have a competitive advantage, right? And also remember this, the COVID-19 play an important role for test your BCP plan also. To what extent your BC plan is properly placed, you can test the efficiency and effectiveness of your BCP, that is business continuity plans, right? Okay, just something else, but digitalization play an important role. And emergence of fintechs we discussed last week. Now, I will explain to you later on. Now, fintechs are giving loans, right? Fintechs are giving loans. We call balance book loans, right? Then you see crypto initial offers, CIO, IPO, okay, CIO. So there are some companies who provide loans, right? So I will discuss those things next week, right? Then cloud computing, blockchain. So these are the new things in the business environment you need to look at. Now, if you really look at some of the statistics, which I gave you the latest statistics in Sri Lanka, right? Now you see we have a mobile subscription around 149%, right? All the information banks are now having apps. Your all the credit informations, payments, your loan outstanding, loan installments, everything can bring into your mobile phone. How many of those banks can give all this information to the customer? We have a 149% per penetration levels, more than the population, right? And internet users, social media users, too. How many of are using social media to advertise our credit products, right? So you see, these statistics will give you some food for thought for bank for credit customers, and also mind you, uh, top of this, right? This is the total population, and how many of you are use the mobile subsidy? A lot of banks are having mobile apps, right? Okay, so make use of that for credit businesses as well. Now, according to the central bank, now you know these this year the central bank has named as a year of technology, right? So you know the central bank has named uh, the to 2020 is the technology or digital year for central banks, right? Now, central bank has appointed a lot of committees uh, to look into the areas of digitization, the bank activities, of financial inclusion through promoting the digitalization, right? And so, a lot of committees was formed to bring the um, banking sector into more digitalized than now, right? A lot of banks have initiated. Now, say for an example, from what are the actions central bank has taken for the banking sector, right? From direct debit, launch in 2015, just pay launch in 2018, payment exchange name in this year. So they are pen. The two banks joined 12th March 2020, and then from 2018 they introduced Lanka QR. Then shared KYC, they may look at it. Shared KYC in 2020, appointed working committee for digital payment platforms, right? And then in a lot of open banking. Now, open banking means giving third parties to, with your permission, to involve the third party to getting to your information, financial information, right? And we need to change your law on that. But remember, and then we have a regulatory sandbox, and financial institution can now support to fintech, because it's a what you control platform given to institution by the central. That means so the central bank naming the digital 2020 year this year as a digital year, but they come up with lot of initiatives, right, to support now, and all thing you can use it for credit businesses, right? Now the classic example, I can tell you one example about the shared KYC. Now when your customer comes to the bank, we get all the informations pertaining to KYC. Every bank is having KYC for individual. So if this is common shared by cloud computing or somewhere else, right, anybody can take, like a classic example for a crib, right? There's an independent body, Anybody wants to get information, they will collect from them. Likewise, the KYC is shared. If you want, you can get it that from the technology, through the technology. So you don't want to keep the separate KYC. So, so those are some of the things, and even for sometime maybe in the future you can use the credit scoring. See, one credit scoring scheme for bank for customer, not for bank for customer. Everybody can take some information about that person one day, right? So, studying, then you can go further analysis later on. But initially, you have some framework about this custom, right? So then you can negotiate further. So then somebody can say it is independency. You know, if you can get the KYC, why not get other things? KYC also same, know your custom. Same thing you can use for your modifying that you can use for your credit evaluation, right? So there are so many things initiative has taken mm, by the central bank and which supports the banks. So the issue is banks are ready now. Sometimes you see these advertisement these days in the central bank, no? Cash wade, right? Then pain wade. So you these are some of the advertisement put by the central banks to create awareness about the customers about this why it is important for go for digitalization, right? Okay, so then uh, some of the commercials, right, run by the but unfortunately they have launched. Yeah, this is in during February or March. Then the Corona came. Then that was further delayed, but they are working on that. Okay, right. Now these are the some of the things we need to understand. Um, need to understand how the impact of the pestle factors in the present situation. Okay, right. Now, I don't know whether you got the information that I want to talk to you. Any questions now? We discuss now the impact of those pestle factors, so-called political, economic, social, cultural factors into your credit businesses uh, deep, before COVID. I mean, these are the factors you need to look at it. Okay, then after the break, we'll have a break now, and then after the break, we are going to discuss the balance part. The balance part is the post-COVID situation. So, what sort of problem we are going to face? What sort of problems we are going to face by the bank and the implication how the economy is changing, right? How the economy is changing, and what are the implications to the bankers and things like that. Okay, right. Now, let me just mm, ask from few of you all, maybe whether you are understood up to now, and then we are going to discuss the most important thing, uh, what how this economy and other political factors going to impact the credit business in Sri Lanka after 2020 March, especially after COVID, right? What are the implications for banks? What may be the future credit market in Sri Lanka, right? How government and the central bank and the bank going to support the customers, right? All these things we are going to discuss after this break. Okay, right now, um, right, just 1 minute. Right. Okay. Right. Sorry, 1 minute. Okay, right. Now, what do you think about Harshana? You understood? Any questions, Harshana? You want to clarify whether you understood now, Harshana? Right? I know, even though there may be less people, I heard that over around 50 students who have registered may watch during that other times, but I'm always prefer you all to be lively join the lecture series. Then you will get some ideas, and also you can raise any questions. But I noted that uh, the two-way communication is not happening very much. That's the usual way. But are you having any problem, any things to clarify? Gayan, what do you think? You're okay, right? You can unmute your mic and just talk to me. It's okay. Otherwise, you send me a chat. Yes. Anything. So now the basic things I want to clarify with you and get an idea about what is happening in the world and the Sri Lanka. Right? That is why I want to explain all these things. That is why we put usually this part. I mean, the credit environment and things like that. We usually talk little later on, but this time, why we put at the very beginning for you to get an idea. Then you have a very good idea about calculations of NPL and all things. You in a position to get it after you have an idea about the credit business, right? Okay, so now then it's time at 3:30. So we will take a break. Maybe I may come around. But how many minutes you want to have a break? Any person who want to tell me? That 20 minutes to 25 minutes. Huh? Now is 3:24. Anyone you want around 25 to 30 or 20 to 25? Deshika, what do you think? Deshika is correct, no? I've just read some of the name is appearing in my list, right? Okay, right. So let's we have a break, and then we are going to start the 20 minutes. Okay, some are said to 30. Okay, so we'll meet now is 3:24. Yeah. Okay, so shall we meet around three? Yeah, somewhere around four.
3:45.
3:45 is too close. May I have to go and come back now, right? So we make it around 20-25 minutes time. Now is exactly what is your time? My time is 3:25. So we'll meet around 3:50, right? So we will be 3:50. So please be ready. We will start again, right? So we'll continue 3:50. Another exactly 25 minutes from now. Okay. Okay, let's look at it now for the next 1.5 hours or so. The impact of post-COVID-19 on fiscal factors with respect to credit businesses in Sri Lanka, right? Now, up to now, we discuss usually the before March 2020, right? Now, let's look at it now after March, right? Now, according to these some uh, research company, and they have identified because of this COVID-19 incidents, there are four areas, four avenues that adverse impact the business. The one is, definitely is, the airline businesses and transportation businesses, and maybe sometimes about the impact on production and impact of markets and the psychology, right? Those are the four main areas impacted because of this coronavirus disturbances, right? Now, these today, now you see the today, this pandemic basically has left us and unprecedented trial of both humanitarian and economic damage too, not only for Sri Lanka, and that is for the entire world. Right now, we had sometime we call in we have Asian financial crisis, and that impacted only the Singapore, Malaysia, Indonesia, and the countries like that. Right, the Asian financial crisis. Then we had some other financial crisis took place in 2728. It is basically impact from European countries, right? So not entire world has not impacted of such cases, right? But unfortunately, and now this particular even for SARS, we had SARS and other some bird flu and things, something also, some natural disasters or some pandemic is not a pandemic, right? Pandemic is happened to all, no, were localized. This happened to that particular area or that particular region or that particular country. But unfortunately, this coronavirus was impacted all over the world. So that's the important thing. Is actually it is a natural disaster. Now, one of the important things we discuss the political environmental, economic environmental, technological environmental, or legal, socio-cultural environmental factors sometimes is confined to only to that country, but only the natural environmental factors will open to everybody. That is why we need to be concerned because it is not confined to only to particular geographic location. Likewise, now this pandemic also impacted all over the world, right? And remember, it really have a negative impact on our economic activity, especially in the domestic front, right? And as a result of that, right, this economic activity downturn has threatened the credit growth of our businesses. Now, accordingly, it was estimated that uh, world going to contract by 5.2%, right? So let's look at it, some of the information. Okay, now first we look at it, the key risks faced by the Sri Lankan economy, right? Key risks faced for Sri Lanka. Now, after this post-COVID period, we look at it how it impacts this exports. So we look at it how it's impact the tourism. We look at it how it impacts the remittances and supply chain management and external debt refinancing. And then, of course, all things are related to credit. Okay, now let's look at it. The Sri Lankan economy. Now we discuss the same thing. The Sri Lankan economy we discuss in 20, early also now before 1990. Now this Sri Lankan economy, we are talking after March 2020 was after the basically start from the coin, right? And the as we explained to you, the first 6 months we expected around 1.5% growth, but we end up with minus 1.6 contraction or negative growth rate. Right now, what is the present expectation of the Sri Lankan government or maybe the central bank? Now, central bank is telling it's very difficult to predict now. The things are keep on changing, but at least what they try to maintain during this end of the year to have a zero growth rate. That means not going negative, right? So the next couple of quarter, the third and the fourth quarter, the bank is expecting, the central bank expecting little higher economic growth, but to not to reach 1 or 2% like that, but at least to have a zero level growth. That means not go beyond down, right? That is what our expectation by the central bank as per the um, Sri Lankan economy is concerned, right? Now, as we said, now these are some of the snapshot, right? A snapshot of the Sri Lankan economy. I am going to explain to you now little more details on this information. Right now, let's look at it. According to the IMF, what is the growth projections that they have updated in June 2020? I mean, last month. Now, this is the country's overall growth. They have estimated around minus 5.6. But you look at it in 2020, the advanced economics and global economy, they're expecting around point in 2020 is minus, but they expecting all things going to normal during 2021. But for this year, the balance year, right? You look at it, the global economy to be contracted by around 4.9%. With this scenario, Sri Lanka maintaining a zero level is a good thing, right? But in 2021 only, they're expecting to grow by 5.4, right? In advanced economy, of course, they're expecting going minus. But 2021, they may go for 4.8, and emerging markets and developing economies is expecting around less percentage comparatively other countries, because those advanced economic countries are badly impacted the coronavirus, right? Now you see the world situation. Now somebody can ask me again why we want to know about the world projection. This is important because we are exporting our goods to other countries. So that is our income generation. If these countries are not doing well, how we expect good export from our countries, right? And this is the another latest world economic outlook growth projection, right? In the world output is around minus 4.8, and the same thing in details, right? Okay, so under such circumstances, what is Sri Lanka expecting? Now, some of the predictions given by the Global Economic Prospects World Bank in June 2020. Now, if you really look at it from real GDP growth on 2019 uh, and 2020 prediction, you see uh, a badly impacted country they have identified is Maldives. Why? Why Maldives? Because Maldives purely depend on tourism. That's depend on the hotel business, so they are going to badly impact. Then again, we also going to impact. This is 2019 figures, and Pakistan going to impact it. But you look at the Nepal, and they have identified not much impact. Right now, you see Bangladesh, Bhutan, right, and those also countries have a positive impact or positive growth. But Sri Lanka, Pakistan, Maldives, India, Afghanistan, right? Overall, South Asia is minus. But some countries in the within our region are positive. Then we need to look at it. Why? Why these countries are positive? What makes them to positive? Right? What is according to the World Bank, they have targeted. We in Sri Lanka we have a -3 negative, but what is the central bank expectation or what is their observation? At least to maintain zero level without going to negative. See whether end of the year whether we are on which borderline, whether zero or -3 2, right? And that is the World Bank prediction. Okay, right. Let's look at it now. The export performances in 2019 and Jan to June 2020, right? Jan to June, our exports. Now you see, the 2020 is somewhat honestly, our export is badly impacted during the month of February, March, April. But fortunately, there may be a little increase in the if you look at it, in little increase in the latter part of the May, June, July, is gradually increasing. That is the good sign, right? That is a good sign. Of course, is encouraging one is in your compared with June, July, same figure in 2020, 2019. So we are better than uh, 2019 in 2020. So that's a very positive sign. And also, I want to tell you now. So when you talk about the our our gross official reserves, right? When you talk about what do you mean, you know what is gross official reserves, right? And you noted that gross official reserves is basically now is somewhere around 7.1 billion US dollars. So 7.1 billion, but they're expecting to come at the end of the year to reach around 5.5 to 6%. Now, why we have a good gross official reserves? One reason is we have restricted imports. So therefore, the remaining 7.1 reserve billion in dollars can be available for 4.7 at least to 4.5 months. But earlier, it is only available for 2 3 months, 3 months basically. But since we have reduced the importation of vehicles and other, there may be import restriction. So therefore, the gross official reserves we may be is first, enough for at least for around 4.5 years, 4.5 months, right? Okay. Now, so what is how much you think the now this is the gross official reserves in Sri Lanka. Now, what is the at the moment in July? It is around 7.1 billion. 7.1 billion, right? You know, we make use of these reserves to pay our debts also, right? But we are expecting to go down to 5.5 to 6 billion. Now, if I ask from you a simple question, what is the total foreign reserve? All the countries, how much you think having? In මුළු ලෝකෙම එකතු කරොත් දැන් ලංකාවේ is around 7.1 billion වගේ. If you take the entire country's reserve, how much you think totally estimated? Now it was estimated around 11.73 US dollars trillion, right? 11.73 US dollars trillion. That is the total world, according to these research. Total world reserve is around 11.3 trillion. You know, out of that, that 1/3 of that amount is owned by whom? China. So that is the problem. Now that is why America is worried about, right? Okay. So the larger portion of world total reserves is around 11.3 trillion, 11.7 trillion. Out of that, 1/3 is basically keep with China. So those are the things, some of the things you need to know. Latest information is available with us, right? And as told you, the export performance. Now, why it is important, this export information? Now, majority of our export destinations are also from USA, UK. That is in 2019 figures, right? UK, you see Belgium 4.3, Germany 6%, Italy 7.8, US. Whatever said done, then they have the largest our export destination, major apparel export destination, basically. So the larger portions of our apparel are sending to America, not to China. You have to remember that also. So therefore, now these countries are having a problem. So therefore, are they going to buy the same number of units or value from us? So that is what we are want to worry. Right? Now, how can we improve other areas. Now, if you really look at it, our exports, right? If you really look at it, our exports, now uh, they have target around this time 10.7.5 US dollars billion, right? Something around that's estimated by the Export Development Board. Now, these are our apparel. Now, we now what we are want to do, we need to look at it. Now, out of all things what we are exporting, only increase factor is tea, right? Those are traditional export materials. Now the export development board in Sri Lanka, and now they are working on that. Even the president want to uh, highlight that the non-traditional export items. See whether we can export those items to destinations. Non-traditional item. Now for that, those are done by small people, right? Now this is how Vietnam came into the today's position. Now Vietnam and other uh, Thailand and all, they purely earlier based on the traditional foods exports, but now they have changed. They will get people to come to their country and they moving to other business areas. So we also now look at it to improve non-traditional items to send abroad. That is why the bank come into the scene. They want to give them a loan to upgrade, improve their um, technical expertise. Want to buy some required machines, right? That sense in this scenario. Okay, now if you really look at it, this information, as I told you, now you look at it, the growth of UK, France, Italy, Canada, Germany, Japan, USA, all these major countries where we have exporting items are having a huge negative GDPs. So therefore, we can't expect them to buy more goods from us. But fortunately, if you really look at it, the figure, our export is little okay during the July when you are compared even with 2019, right? It's an encouraging point, right? Now, another important aspect. Now, if we want to have a foreign now, why we need exports? Because of we need to have exports to improve our foreign reserves, right? Now, what way, of course, you can improve the foreign reserve is bring FDI, the foreign direct investment, to Sri Lanka. Now, if you really look at it, Sri Lanka is not a good destinations in that respect. Now, if you really look at it in destinations, right? In Sri Lanka, you see our percentage is very much less when you are compared with other places. India 23%, Vietnam 4%, 38, 50 like that. We are getting only 0.2% of the world uh, FDI means foreign direct investment. So we can't expect, therefore, for more money coming from the foreign investors. One way we can look at it as we discussed earlier, and we can think about the tourism business. And tourism also we need to look at in a different angle. And because since we have happily controlled the corona, so there may be a people can come because they have identified as a seeker's place. And also, mind you, now all these people, because of the situation, no flights are taking place. They may, you are now blocked. Actually, that's a psychology aspect. The moment the economy open, there may be a lot of people try to do tourism, right? Okay. Now that's you need to look at in that aspects. Now we are there may be an opportunity for us to more tourists to come because they are now no they have not gone anywhere. They are blocked now. So that the Sri Lanka may be an ideal opportunity for that. Now for that we have to be ready with new innovative things. For that now Sri Lankan government or the banks need to support them because during this time they are at a bad. That is why they have given some concession. We will discuss all these things later, right? So therefore, we cannot fully depend on FDI. In that case, so we have to look at the other alternatives. And another important thing is workers' remittances. The workers' remittances are also, remember, like to be impacted with low international oil prices as well as this COVID-19. You see, a lot of people are back in Sri Lanka who work there. And World Bank also forecasted around 19% decline in Sri Lankan's remittances. Right now, accordingly, from US dollars, 6.78, uh, roughly 6.7 billion we earn from foreign remittances. And mind you, the foreign remittances is the number one income for Sri Lanka. Next, the apparel, right? Now, 6.7 billion we can come back to 4.4 billion in 2020. And remember, Sri Lanka has about 1.7 million migrant workers and 5 million beneficiaries from them. Now, see the corona how impacted our 1.7 million migrant workers. So, there may be a huge amount of money not coming to Sri Lanka because of this corona impact. Now, if you really look at, I have given you this figure. Please getting this figure and see, right, how these figures impacted 2020 latter part of the year, right? These are the total remittances come to Sri Lanka, right? And then another important factor we need to look at it, the government debt refinancing. Now, even though the economy is not doing well, so we need to pay our debt. So the president has requested from the international monetary funds and the World Bank to see whether we can just postpone or paying, but there's no uh, response from them. So therefore, being a country where you took a loan, we have to pay, right? Otherwise, it's impact to our credit rating. So therefore, we need to pay the loans we have taken, right? Now, if you really look at it from external debt refinancing, it may expected to go around 100% maybe during the 2020 latter part, right? Or maybe early 2021. You know, this is the percentage of GDP. Now, there are instances like now, okay, how government obtain loans, debts by issuing treasury bills. Now, in 1923, the government of Sri Lanka introduced treasury bill, right? In 1923, and then in 1937, the rupee loan introduced, right? The rupee loans, and then 1997, the treasury bond introduced. All are local rupees, right? So this is how government issue debts to form of these instruments. But in 2001 and 2007, respectively, the Sri Lanka Development Bond and International Sovereign Bond introduced by the government of Sri Lanka uh, through the central bank for earn foreign debt, right? So therefore, accordingly, Sri Lankan present debt to GDP growth rate, right, percentage of debt to GDP is something you noted that more foreign loan than the local loans, local debts, right? Now there are two instances, yeah. two or three instances in the history of Sri Lanka where our uh, debt to GDP ratios go beyond 100%. Right, one time is highest in 19 highest in 1989, and then 2001 2004 period has gone up. Now maybe this year end may can go up to 100%. Right, there are not always, right, only 1989 has gone up more than 100%, and then it has come down to 70-80%, and then from 2001 to 2004 it go up again more than 100. Now there is a possibility of going again the government's debt mm, during this period, right? And also I want to just to highlight some of the things, the Sri Lanka debt trap. Now what do you mean by a debt trap? Now debt trap mean taking new loans to pay old loans. That is what we call debt trap, right? Debt trap is called we are taking new loans to pay old loans. So that is we call usually debt trap. Now, if you really look at it, this information, so how much we need to pay, right, about the sovereign bond and things like that, you get an idea. And mind you, if you really look at it, the growth rate, right, and the foreign debt ratio, and this is how from 1949 how it looked like. So that means it's going up, coming down, and again going, right? Okay, so you get an idea on that. This with the annual, uh, with the comparison with the annual growth rate. Okay, now how this year government need to do this one? So we have to pay in October $1 billion, and then averagely around 4 to 5 billion, 4 to 4.5 billion annually to be served for the next 2025 period. So 21 to 23. So we have to pay around US dollars 14 billion. So collectively, now from where we are going to pay this loan? As a responsible country, we have to pay this debt finance, foreign loan especially. So the next couple of years from 21 to 23, so we had to pay around 14 not trillion billion US dollars, as every year we need to pay around 4 to 4.5 billion, and this October we need to pay 1 billion. Now, how we are going to pay this loan? We are going to pay this loan through export earning. Now we have a problem with export earning. Unless otherwise we'll do something. Now, growth sign, export increase, right? The tea increase. So we accordingly we need to reduce the imports, right? Now, if we don't have enough money generating through remittances or exports, we don't have money to pay. Then why? How we are going to pay? Use of reserves. So then the reserve is depletion. So therefore, we have a very bad time, right? To improve the exports, therefore, we need to provide loans to small sector people. Now, mind you, we discussed earlier, only 2.3% of our entrepreneurs in Sri Lanka out of our total population. So we need to develop them by providing adequate loan to the SME sector. That is one way. Local requirement to be looked after by ourselves by resisting the imports. Right now, you see the impact of these impact of all these things. But and again, government also going to take some loans from some other countries like you know to collect some money from syndicated loan from China Development Bank, so from uh, Reserve Bank of India, People's Bank of China, right? And we, countries discussing with other infrastructural investment multi banks to obtain some loans. That means loans taken. That is why we are put into the debt trap. If you don't have a get a loan, why we need to use our resources, reserves to pay? Now imagine the situation. So we have to have hardship definitely because it is the country, right? That is why we may restricted certain imports, right? We have to understand that. Okay, now de-risking. Now, having understood these all these risky factors about the Sri Lankan economy, how we can de-risk the economy? What action the central bank, as the government, as banks, we need to take, right? Now, after COVID-19, uh, so the management of Sri Lanka has taken some actions. First action is, of course, we are well aware, the border control of health sector policies, right? That's worked very fantastically, Sri Lanka, when you are compared with other countries. The second two methods is relevant to us, that relevant to the banks. One thing is the fiscal measure, other one is the monetary measure. Now we are going to discuss in detail how we de-risk the economy by using fiscal measures and monetary measures that was applicable to Sri Lankan banking industry. Right, let's look at it, some of the physical initiatives taken by the government, right? And it actually is a cost to the government. The government has allocated rupees 0.1% GDP for containment measures, right? As well as we also given contribute to the SARC COVID emergency fund of 5 billion. So 1% of the GDP allocated for some containment measures, right? And also president has announced the cash payment totaling around 0.25% of GDP, that is 5,000 like number for vulnerable groups. Those are physical measures taken. Its impact on expenditure, government expenditure, like tax exemptions. Now, because of the tax exemption and this government tax exemption, it's one of the lowest in the world. It is from the GDP. Our tax percentage is income is around 1.6. Yeah, around 1.6 of the around 1.6%. So it's a comparatively it's a small amount, right? It's a small amount, right? So that means, so definitely there may be a increase because GDP to tax income is reduced, and government also initiated and postponed some tax collections and things like that to benefit to the COVID impacted people, right? And give some concessional loans and things like that. Now, these are some of the uh, physical directions or physical initiatives taken by the government to address this risky economic conditions, right? And there's a task force appointed to economic revival, poverty eradications, right? And also, and government also requested the wealthy people or the needy people for inviting local and foreign tax-free donations. They have funds, and the funds are accumulators is around to 1 billion or so, like that. And this fund can be used for a physical purposes, right? That is, those are not much relating to the bank, but however, these money can come back again to the bank as form of deposit, so maybe a sort of payment or something like that. Okay, right. Now let's look at it. The now let's we look at it. The financial instruments available with the central bank to address this de-risking economy. These are four famous tools: open market operations and policy interest rate, that is standing, lending, and standing deposit rates, and reserve requirement, that is statutory reserve requirement, and bank rate and quantitative restrictions on credit, ceiling on interest rate for credit, foreign exchange operation restrictions. Uh, those are the three main. And what do you mean by morals? So that is basically where moral design mean, uh, without forcing the financial institution, the central bank, the monetary board, will request banks to do certain things, right? Not legally, but they are requesting. Is a politely just tell, please support something. So these are the four policy main instruments of central bank can be used to easing of this economic risk. Now let's now look at it, how these instruments are used by central bank to provide benefits to the credit customers, or for that matter for general public. Okay, now you understood. I hope you understood, right? So how these instruments, these are monetary policy instruments available, and how these factors are used by the central bank to provide facility to credit customers. Now let's look at it. Now first one is, you see, the monetary policy instrument. So that is basically standing deposit facility rates and the standing lending facility rates. Now central bank can change these rates accordingly. They can determine the market rate of the interest rate prevailing in the market. That is basically, we call earlier these standing deposit facility rates, we call them as repurchase rate, and uh, and the other method is a lending rate we call reverse repo, right, rate. But now we won't talk on that. We talk standing deposit rate and standing facility rates. And these rates has to be regularly monitored and revised if necessary, and also can look at it for further reduction. Right now, that gives you a bank to give you the customers low rate. Now, what is the present prevailing rate? 5.54 is DFR. Standing lending rate is 6.5. The bank rate is 9.5. That means if you want to take a loan from the bank, so the central bank giving us a loan for 9.5. Right? So this is the one way the central bank addressed this uh, situation. That means, so bank was request them to offer low interest rate for their credit, low interest rate for their credit, because of changing the standing deposits and standing lending rate. Clear? Right? Understood, right? Okay, then we have another instrument we call monetary policy instrument, right? And thereby we increasing this instrument, right? You can change the money going out to the market. So banks need money to give loans. So if the money is available in the market, bank can give loans, right? Inject liquidity if there is a shortage in the market. Through open market operations, the central bank able to provide adequate liquidity to the market. Now, how can you do that? Through daily auction of buying and selling of treasury bills and treasury. That is the monetary policy instrument. Now, let's look at it. Okay, so something is missing. Something is missing, right? Okay. Now you noted that there's another one in your handout. You see the another monetary instrument. It is in your handout, right? It is not there. I don't know why. The another important thing is the reductions of reserve ratio. It is there in your handout, right? Reserve ratio. Now, what is the present reserve ratio? Actually, it is bring down from 5% to 2% SRR. Now, through reducing from 5% to 2%, what are you expecting by the central bank? Right? Now, what do you mean by SRR? SRR is the proportions of the deposits, liabilities had at commercial banks are required to keep a cash deposit within the central bank. Right? So that money only you need to put by the commercial banks, and that is idle money in some extent because you won't get any interest for that. Now that figure is reduced from 5% to 2%. Then there's a ample money is available with the bank to give customers, right? And this is not only the central bank, this is the normal other central banks in the world also apply those principles, right? Right. Now let's look at it. Now there's an article about this SRR I have written to the papers. You can. I will try to send you, but otherwise you can see what is SRR, how it impact and all things. I wrote an article to Daily FT. It is available in Daily FT, August 5th. Yeah, August 5th or 6th. If you look at Daily FT August 5th or August 6th paper, you can go into the website FT, and there's an article from me talk about the SRR, all the implication. You know, these, if I put it in nutshell, if you look at it in 6th or 5th, right, FT. Now SRR apply in almost 120 odd countries in the world, right? So that policy. But there are some countries they don't have SRR. They don't believe this SRR. Countries, there are 9 countries as identified, like countries like Hong Kong, countries like China, Canada, countries like UK, country like New Zealand, Australia. They are not having this SRR facility. Now you need to remember that you get a comprehensive article I have written, so please go through for more details, right? How SRR affect the Sri Lankan economy, right? Okay. Then there may be in Sri Lanka, we had around from 1950 we have a SRR. You know which year is the highest SRR in Sri Lanka? That was in 1985. That was in 1985. You know the SRR figure. Now we are talking about merely 2% now. But in SRR in 1985, it is around 18% for demand deposit. But for savings and FD is 10 to 12. No? So huge SRR charge during 1985. But in after 1997 and 2013, it has come to the single figure. Now is merely 2%. But remember, some countries SR ratio may be 0.2, but countries like Argentina and things like that, the SRR ratio is 90%. Right? There's a various purposes the SRR are maintaining, right? You see on that figure. Now the question comes, now as a credit student, you must know how SR reductions of SRR, how much is money is coming to the market, right? How much of money is coming to the market. Now I will explain to you how much of money coming to the market for banks to give more credit. What is the mechanism? Okay, I try to explain that mechanism. Okay, now let's look at it, this mechanism. Now say for an example, now total value of deposit liabilities at a given date, we call A. We say for an example, deposit balances may say around in the commercial banks line. So we say around 100 billion, say 100 billion. Okay, say for an example, A is 100 billion. Okay, right. Now we talk about at that time the SRR figure is 5%. Now what is the 5% of SRR mean? That means 5 billion, right? Say for an example is 5 billion. Now once it's reduced to 2%, so what is the present amount is? Again 100 multiplied by 2, then 2 billion. So what is the money really available now for banks to give? 3 billion, for example, right? Now, not only when you are calculating the SRR, we need to look at it, the currency and notes held by banks also. No? Now, there, of course, we look at that amount, is we call them as B, that we have to deduct, that amount is called D, right? Then further reduction of B minus D, and again 2% C minus D, right? So then that figure is come to F, right? Now excess liquidity means E minus F, right? So that is why central bank is telling, because of reductions of central bank from 5 to 2%, banks are now having around, according to that information with the A figure taken into account, approximately 190 billion by reductions of from 5 to 2% SRR. So bank have excess liquidity. That means you don't want to keep with the central bank, right? That 190 billion not money available for bank to give loans. Otherwise, all these things are not available earlier to the banks because that was with the central bank. Right? Now reducing SRR mean is that. I think you understood now. What do you mean by, what is a policy measure taken by the central bank to reduce the SRR? Okay, I hope you understood that part clearly. Right. Now let's look at it. Another facility is given by the central bank, and introducing a debt moratorium given. Now, you know, a lot of people think they don't know what is debt moratorium. I think you may, as a credit guys, more know. Debt moratorium is not a, remember, it's not a free loan, right? So you are postponing the payment. That's what we call debt moratorium. A lot of people are not aware about what is debt moratorium, right? Now, debt moratorium is basically we are talking about uh, is an EMI holiday basically, or sometimes we call them as is a postponement of particular duration in the loan feature, borrow if not required to pay. That is what moratorium, right? It is a law saying suspensions of an activity in the legal context. So you don't want to pay, capital plus interest during that time, but you need to pay interest for the balance period. That was extended by the government for 6 months, for especially for EMI and other things, right? And the business are also receive working capital loans for pay their salaries and things like that for consider rate of 4%. Now, now if you see banks, they talk about this. They say they have given up to now around 68 billion and 100 billion they have planned to give under the credit support scheme by the central bank, and to the approved by the central bank will be given to the needy credit customers. Those are facilities given by the central bank through the banking system for credit customers, right? Remember that also is and play an important role. So these are some monetary activities taken um, by the by the government through the central bank. And mind you, and that was finished in September 30th, that moratorium period. But for tourism industry, the tourism people, that was extended for another 6 months from September to March. So that is an extra benefits given to the people who are involving in tourist business. Now, it was estimated that the number of loans given for the tourist sector in the banking sector, something is close to around 275 billion total loan. That is my estimation, right? It may be variation for 10%, 15%, but according to the information what I have gathered from analyzing the banking sector, the tourism sector may be given only something called 275 to 275 to 60 billion loans has given to that sector. That was further extended by 6 months, but not all other things, right? So those are the monetary decisions taken by the central bank for facilitate the credit business customers, right? Accordingly, now banks need to work out, right? I will explain that little later on, right? And in addition to that, the government has taken a lot of initiatives, and they restricted of import of vehicles and other non-essential items, uh, and thereby you will reduce the outflow money is going from the reserves, right? And also top of that, and CBL has direction give license banks to charge maximum of 12% for pawning from April, and it was further reduced to 10% from August this year. But it is very nice to see some of the banks I have noted uh, giving even less than 10% for pawning. Now, if you see some, I don't know about your bank, some bank for phoning advances, that is the maximum amount can charge from the customer given by the central bank, 10%. But some other banks giving less than that. They charge only 9.5 like that. And they say we have to be very careful. So that means, so they can give further down. That is the misconception sometimes come to your customers. මෙච්චර කාලයක් මගෙන් ගොඩක් ගත්ත නේද මුන්ට මේ අඩුවෙන් දෙන්න පුළුවන්කම තියෙද්දි. Something bad image will come, but it's good anyhow to give a low rates, right? That is up to the bank decision to facilitate the credit customer. So that is because it is noted that phoning, even though it's not a financial product per se, play a huge role in country's economy. It is unofficially discovered that phoning have a direct relationship with the economy, right? Because a lot of people phone their article uh, and take some raw materials and things like that. Once you get the harvest, they will return. So automatically it's some sort of a loan business. And bank also easy to give them a loan because it's short term and they have the gold. Now gold price is now going up, right? So LTV is no problem. So therefore, that's an ideal security for banks as well, right? So, but they reduce the rate of interest to facilitate. And then again, as we explained to you earlier on the legal environment, I told you banks need to maintain minimum capital requirements by 20 billion and things like that. Now that was postponed for 2 years for 22. That means the earlier seal end of this year amount of 20 billion were given another 2 years um, concession. So therefore, grace period for another 2 years. So therefore, bank don't worry about to find out to bring capital to the institution, because that was postponed for 2 years, right? Then another lot of other measures also introduced to restrict capital flows temporarily through suspicions of outward investment. Now, people may invest the money through business, OII. So there is a new foreign exchange accounts, right? All have closed. No, now only four type of accounts are maintaining. No? So those things are now temporarily provided by the central bank, because the money is needed, foreign currency is needed by the city. Now, another important thing is I just want to mention, and we realize that now because of this corona, have a good things to the country also. One factor is now people are not traveling. Sri Lankan guys, not foreign guys. Sri Lankans are usually travel abroad for vacations, for holiday trip, for studying, and lot. So you think huge amount of foreign money, local foreign reserves are going for that purposes. Even though we have not really worked it out, very large number of foreign money or foreign reserves is going out from the country for individual people or the group of people to visit other destinations. So once you go India or Vietnam or Bangkok or for because you spend some money, you have given freedom for $10,000 or something, right? So those money is with the country, right? Remember that also. There's a good point in that case, right? Rather than Indian guy come and spend money in Sri Lanka, we go to India and spend more than money from that person. So that we have to look at it that no, we go to India and spend more money than the person who's coming from India and spend money in Sri Lanka. Remember that also. Right. Okay. Now then government introduced another account we call special deposit account, and to attract more foreign currency from Sri Lankans and do wishes. For that, they have offered special interest rate uh, for them. And also, State Bank was requested especially to consider giving more loan to micro, small, and medium enterprises, right? And those are some under Saubhagya refinances scheme, right? Right. And also, so President has requested the banks, especially the state bank, not to give large commercial loans, but to give maximum possible small SME, small ticket size loan, right? To give more people rather than giving a one person a big loan, right? And also the people who send the money from overseas and requested by the government from the state bank to provide loan scheme families and to avoid the transaction cost and such remittances for waive for period of 6 months. Now we are charging some money, when a foreign remittance comes, we will charge some commission. Now what government request from the center? That is the moral scissor, right? You see, that is the moral scissor from requested them to not to charge. Okay. Now again, so certain people have given a lot of large pledge loans, and what they say, try to recover that pledge loan by the banks are given during this period. And also, uh, requested to look into their lending policy to give more loans to small segment, right? Okay, and then another important thing, central bank is introduced liquidity. I mean the liquidity position of the bank to ensure the continued supply of credit to the market, and certain assets to be considered as liquid assets. Right now, there are some assets they have considered under liquid asset, because in order to have maintain the liquidity requirement that was imposed by the central bank, they was requested certain assets can be considered as a liquid asset where is not considered earlier. So therefore, liquidity requirement also thereby increase, and also it can be matched from that new asset-based liquidity. And under Basel III, you may going to learn under Basel III, every bank from 2020 onwards need to be maintained the liquid coverage ratio and net stable funding ratio is 100%. Right now, these things I think you are aware on that. Liquidity coverage ratio for the short term, bank have a short term money for that is called liquidity coverage ratio. Net stable funding ratio for the long term, more than 1 month, so maybe 365. We have a cash to pay a long term as well. That percentage need to be maintained by 100% earlier, but because of this corona version, that was requested to maintain 90%, not at 100%. There again you have a 10% margin, right? Okay, then um, also, if money owned by the banks, any liquidity requirement, and central bank was requested to release the money from Sri Lanka Deposit Insurance Liquidity Scheme. Right now, in Sri Lanka, every bank must contribute it quarterly based on their eligible deposits. Some percentage is around, depend on the bank's asset base and depend on the type of the bank. They may need to maintain 0.1 to 0.15 percentage as a premium. Now, through that, based on the base of the deposits, at presently, a central bank that fund that SLDI is Sri Lanka Deposit Insurance Liability Scheme is having around 60 odd billion money. Now, central bank is telling, okay, that if a bank need money, you can take it from that scheme, but of course under bank rate, maybe around 9.5% or something, right? It's a loan given by the central bank to the central bank, from the central bank to the banks if they need money to borrow, right? Those lot of facilities is given by the central bank for banks if they need more liquidity. Now, after some time, now people are telling we have a excess liquidity in the market. So that means bank may not given loan enough. One reason. That is why the liquidity is there in the market now. Right. Okay. Then again, the central bank restricted not to issue any cash dividends, engage in share buybacks, uh, increasing management allowances, special payment to board of directors, and to curtail non-essential expenditure and spend more prudently with the capital expenditure. Lot of initiatives have taken by control the money position in the bank, right? So these through these activities what central bank is trying to do to keep adequate money for lending purposes, right? Okay, now these are the initiatives taken by the central bank, right, during this year. Now we have to wait and see. There may be another. Now there is a possibility of further reductions of standing lending rate and fixed deposit rate. Further can be reduction of SRR if need arises in the market, right? But these are some of the things up to now the central bank has initiated and given benefits to the banks to through the banks to the credit customers, right? Through de-risking the Sri Lankan economy, right? Now we look at it in a different angle. Now you have to read these things with that my article. More details was given in the articles, in not in your handout, but just listen to me. Now let's look at it now. Because of all these facilities given by the central bank, because of this country's present economic situation, what are the implications on banks, right? What are the implications on banks, right? Okay. Now, I just see uh, whether uh, how many of you all now understood up to now. Any questions? Please. I need your response. Now, usually when I look at it, the record version, we can see the hits no. So it's almost 300, 400. Sometime maybe for your student, your class, maybe even though you have registered maybe around 50, but 150 people have seen this our videos uh, through the tube, right? But I always prefer lively, actively involved with me, right? But these things may change. Now, what I told now, maybe another 2, 3 months time, or 2 weeks, 3, 4 weeks time, maybe change. Some more additions coming, right? Okay. Now, what do you think, Danuka, Chaturang? You understood up to now what actions taken by the central bank to facilitate our credit customers through the banks. Now, these are the things as a bankers must know. Now, you as bankers, you have to work, right? You have a lot of work. I will explain all these things and the implications for bank, right? What do you think, Buddhika? Right? I understood. Buddhika now. Right. Then, how about Dilshan? Right? Dilshan, you understood what I explained to you, what sort of initiatives taken by the central bank, what are the benefits?
Excuse me, sir. I have a question.
Yeah, sure.
Yeah, Faiz here from Kalmuni.
Yeah,
Thing is, the government has introduced so many things for the survival of existing business.
yeah,
So at the same time, export-oriented business also picking up, and government is giving some motives.
yeah.
So when there is a new
Yeah.
startups, what sort of initiatives there in the government scheme?
Yeah, now that is what the government say. So some of the those are yeah, correct. Now those are the people who are affected. But then that is why government is saying that is one of the reason why they reduce the SDR. I mean the the policy rates you call from 7.5 and 6.5 to 5.5. Right? Understood? No? Right? That's you understood why they reduce the policy rate.
Yes, yes, okay.
Now, what do you mean by that? That means now you look at the bank's interest rates for loans. Earlier, all loans are above 13, 14%. No? Now, if you see the today's paper, there are a lot of loans are offering at a 7, 8%.
7, 8%.
So that means that don't you think is an encouraging? That's a startup loans, some sort of a startup loan. Now we have issues of honestly of now cash flow. Now there are two type of loans. No, one loans. I will explain those things in the next Sunday. Now there are two type of loans. No cash. Now I am going to explain those things, but doesn't matter. There are two type of. One type of loan is there are three basically types of loan: cash based loan, and then security based loan, project loans. No, right
Yeah.
now. Now, when the proposal come to the bank, it is a duty of the credit manager to see. Now we have learned some concept, no, 5C concept, Campari, and all sort of things, no. So we look at it before you granting the credit worthiness of that customer, capability, purpose, and all things we look at it. No, right now under these circumstances, the credit evaluator need to look at it. The the importance is as a conditions. So what is happened in the environment, right? Now we have to change his appraisal form. Got my point? Right? Now we have to look at in a different angle how you evaluate that person. Now some loans are cash flow basis, some flow are security basis. Now I'll have a good example. Now I will explain to you. Now say for an example, we have to be careful. Now when you're going for a loan for Colombo house, right? We work based on the value of the land. No, clear? Understood? Now, are you aware the land price? There's a we call a land LPT, land price indicator LPI, is published by the central bank, getting information from survey departments and various other prime dealers, right? And now you the market price of Colombo has come down from 13% to 7%. That means the value of the land is come down. Now, if you use the old value, so that means there's some problem. So we have to look into all these aspects. But coming back to your problem, your question, now that is why the bank take not only to the catering to the existing impacted person. That is why averagely by bringing down the policy rates, right, from standing deposit rates and standing lending rate. Earlier you think maybe 2 3 months ago, how much for housing loan, even how much for normal, even for OD, how much you think, right? Now
16%
yeah,
something.
now it is come down to little less than amount. No, I mean they are earlier 20 odds. No, okay. Now that is how they give the startup business. I think they may come up with some more loan schemes. That was requested by the bank for individual finance companies, so individual banks to develop their own loan schemes. That is, as I said, I told there are four things. One thing is reducing the policy rate. Other one is reducing the SRR. Other one is the open market operation. There's another one. What I also say. What do you mean by that? That is request the central bank from the bank do initiate something and give some loans to the business people. Got my point? Now I think you are clear. Huh? I don't know to whom I talk. You okay? Right? You understood? Right. Okay. Thank you, Mohammed. Right. So, any questions like I am prefer to raise questions like that. Then I mean, then we in a position to have a better dialogue. Anybody want to question like that? So that's the way. That's the best way to learn, right? Any questions, Harshana? Right? Any more questions, Harshana? Oh, Gayan, so I'm always reading the names appeared in the first four people in the my computer, right? So I'm sorry for others, right? Okay, I hope you understood up to now. You're feeling interest of listening to that or not? I need your feedback. Hmm? දැන් මේ දක්වා මේ යමනොහරි ඉගෙන ගත්ත නම් මොනොහරි එකක් තේරුණාද වැදගත් වුණාද අලුතෙන් මොනොහරි ඉගෙන ගත්තද something where you have not learned. I think most of you are not learned how SRR impact business, no, how SRR benefit the bank. So now you know how to calculate the SRR at least, no. So this is the way SRR reducing how money is coming. Okay, right. So now, okay, now we have another how many minutes more? 20 minutes or so. So we will try to start the implications of banks, right? I now you read my article, right? I have given only the key areas, but the description I have given the article, but I will try to explain that, right? Okay, now I don't know whether I have time to do all things, but we will start today and will complete next week, and we will discuss next week different things, right? This is the more or less theory part, as in how to develop a new product, things like that, right? Credit products, things like that. Okay, now let me now explain about how because of these factors, right? How implication to banks. දැන් මේ ඔක්කොම හොඳයි තමයි. දැන් මේක නිසා බැංකුවට එන්න ප්‍රශ්න මොනවද? Right? Implication. Now let's first look at the profitability. Now, now these are short-term measures taken uh, by the respective regulators and authorities to implement through the banking system. Now, one thing we need to understand: banks are there to support economy. We need to understand, not purely go for profits, because banks usually earn fair enough of profits compared with other business. Only the banks are not much impacted because of this. Not all the institution, all the industry may impact, but anyhow, banks, I don't say it's not impacted, but banks to some extent can manage, right? So during this time, banks has to play a pivotal role. අර කතාවක් තියෙනවනේ සිංහලෙන්, යුද්ධෙට මොකද්ද කියන්නේ, යුද්ධෙට නැති කඩුව කොස් කොටන්නද කියලා. ඉතින් මේ වගේ වෙලාවක බෑන්ක් නැත්තම් මොනවටද බෑන්ක්? Some customers may ask you, even the government may ask you. The banks are there to support, right? Because who is our ultimate customer? Is our credit customer, right? So if you are not look after them, what happened? So therefore, we have to have some role, but we have to you have to balance it, right? That's important. Now, one factor is the profitability. Now, profitability is otherwise, not the government bank or other one, but for the private bank, the shareholders are shouting. So all matters, right? So profitability. Now, these all benefits given to the banks, to the customers. Now, there may be a revenue compression from multiple sources, right? Profitability can come from multiple sources. Now, say for an example, when you're calculating I think most of you are calculating the moratorium now. So, what is the interest rate the central bank is asked you to charge? Is 7%, right? Okay. So, there may be a profitability issues, right? Due to operating condition, performance of the banks are not much operated, some now is operating but they have closed certain period, and also especially for NBIF, that's an unbanked financial institution in particular, right? And they are more challenging and affecting the asset quality, right, and the profitability recovery. So we need to understand that there may be definitely a profitability issue. I can't disclose some bank's name. I can't disclose the bank names, and they also work out the profitability impact of this. Some large bank in Sri Lanka, they have estimated around 7 to 8 billion. Some banks may be 2 billion, so they can absorb, right? Mind you, they can absorb such loss, right? But it in impact to the NBFIs cannot absorb, right? So there's a profitability impact, right? Okay, next one. And also, as I told you, the introductions of debt moratoriums may reduce the stress on businesses, but may causes for banks because of the profitability issues. Because ultimately it's impact you. So the management will say, no, I can't give you bonuses this time because our income has come down. There are a lot of issues will come not now, little later on, right? And now already some banks are cut their special payments. Lot of actions they have taken, right? So I don't want to discuss all these things, but that's how some especially some institution, some leading institution, and they are cut their salaries by 10%, 25%, 30%. So that's also one way a good, rather than losing your job, right? As an employees who privilege and who enjoy very much during the good time, all right, need to be sacrificed in the bad time also, right? Okay. So the second point is possibility of increasing NPA. Now, in Sri Lanka, that is what I told you. In Sri Lanka, we have we don't have much financial discipline. When government says something, people think they are giving free of charge, right? So they may tend to not to pay this one. So this moratorium, they not understood sometimes. So people think the moratorium means is a concession given. You don't want to pay the loan. No. So that means you have to pay, right? Right? After some time. But that was misunderstood by the people, some people. So therefore, there may be definitely increasing the NPL. Even for now, you noted that, right? You noted that. So NPL is growing now, and it is estimated that you see that figure. So NPL has gone up. We discussed this figure last time. Can you remember? Right? It has gone from June 2020, end of this 2020, from the starting figure from NPA, 85 billion to reach 465. That's NPL ratio is 0.5.1. So it is basically is under these circumstances okay, but that is not the good thing, right? And remember, we discussed the last week about the categories of NPL. The the loss category is increasing, right? Okay, so those things we discussed, and the NPL gross and non-performing loans increased to 466 billion from 381 billion. That means there is a possibility of increasing the NPL, right? Okay, so I think you understood that, because NPL is impacted to us, and also most of the banks as given to migrant workers, so they are lose job, and that is another area we need to look at, right? Because a lot of banks has given loan for migrant workers, especially for business loans, even for housing loans and all. Now they lost their job. Now banks not going to take their house. No, we don't want to be a property developer, but we need interest and the money. So therefore, they may have some issues. So in the future, I think the government may need to look at it, especially for. So now these days we are only talking about the business people. Now we need to relook at it, the migrant workers who may lost their job, who came to Sri Lanka. Now from where they are going to pay the money? So we need to relook at it, their laws, right? So these are the areas banks need to relook at. Okay. Then we look at it, the third factor as accordingly, the provisions has to be increased, and then impact on banks, pressure on NIM. Now, declining NIMs anyhow is took place the last couple of years. Now says emergency interest rate cuts. Now you see the important things. Now we have given loans. Now this is a very important thing. I think a lot of banks are facing this. Now we have given loan um, for certain customers at a higher rate, around 13-14%. Right? Now these customers are now, they come and asking us to reschedule, so relook at it. Their loan installment. Right? Now there are a lot of, otherwise they said, no, I close, I go to another bank. Even paying penalties, no problem, because earlier, suppose the person who took a loan for 12% to 13% for housing loan, for an example, now charge 7%. Now how much the difference is? 6%. Now definitely that person come and ask for some interest concession. All right. Now what you're going to do? So otherwise he said, no, I'm going to close, I go to another bank. Even though you increase your penalty charge for reimbursement, right? So then the customer may not like with you and you are losing the customer. So we need to cater into that segment as well. So therefore pressure comes from NIM, right? Okay. So and also new lending also reduce rate, right? And there are a lot of issues are coming for NIM, net interest margin, the difference between deposit and things. Okay, so that's another implication for banks to really look at it. And then we look at it, the fourth point, now fee-based income and other loans. Now fee-based income, you know, the remittances are reducing, and we were requested to not to charge much high charges on that income. The other fee-based income also coming down, right? And also requested by the central bank not to charge check returns, stop payment, late payment fees on all credit cards, you know, and other credit facilities during the period up to 30th 9 2020. No additional interest will be charged on the capital. Penal rate will be restricted to 2%. Like earlier, that was removed and then again reimposed. uh, and installment deferred under the concession granted. Transaction cost of such remittances could be waived off for the period of 6 months. All factors impacted the fee-based income of the bank. And also we don't have much securities, you know, off balance sheet activities uh, like indirect advances, right? Okay, so income from guarantees, there's not much import business are taking place. There's no more shipping guarantees and things like the income from the fee-based income also comes down. Okay, so that also impact my businesses, right? Because of this COVID and the government initiatives, what happened for banks? And you see the workers' remittance, as I told you earlier, right now it has come down from 6.7 to 5.4 billion, huge amount. And the number one economic remittance income source to the country. Okay, right. And if you see that figure we have discussed, and then impact on banks, the indirect advances, like now what do you mean by indirect? And as I explained to you, the off-balance sheet activities, anyhow it was come down because of 2019 due to that Easter Sunday attack. And then what happened? Uh, so we stop suspended facilities for importations of several categories of motor vehicles and other non-essential items. And so LC opening has come down, right? Because of the less LC opening, what happened? The major income has come down. Okay, right? So there are so many impact to the banks, and if you really look at it uh, from December in figure 2019 with when you're compared with 2020 first half figure for LC opening and indirect advances and other things, you noted that almost all banks, all banks has come down. Now, this is very practically applicable in certain branches of your bank. Now, some of the branches in certain areas like Kohuala, Nuvegode area, there are a lot of car importers. So those banks are earn high profit from LC opening, right? Now, there's no car bringing, so those particular areas banks are really impacted, right? So you noted that. So their income, branch income also come down. So it ultimately impacted the entire bank profits generation. Okay, so I will stop today now. I talked too much also. So the balance part, the impact on other factors, there are some more factors. I will explain to you next week. And then I will introduce another area where my last part, uh, under this advanced diploma in credit management. And thank you very much patiently listening to me. Finally, I just want to ask, okay, you understood, right? I'm happy all people are here till the end. So you need any clarification, please ask from me. It is always better to have a two-way rapport system. Please, I will try to send you the next two as possible, and I will wind up my session next week. I think Indica will take up from from 20 onwards. We talk about the credit administration. So I hope I have given some food for thought. Those are real life situation cases, right? Okay, then thank you very much being with me for 1:30. I know it's not so easy to be stick to 4 hours for a class online, not like coming to the classes, and it is very much like I prefer to have a one-to-one at the classroom, but I am not seeing your face, whether you understood or not, but then doesn't matter. I hope I have given uh, my everything to you all to be students of IBSL and to understand the credit situation in Sri Lanka. I don't know whether most of you are involving in credit business or no. That of course I want to ask some. I know some of you all may be not directly involving with credit business, but how many of you all are involving in credit business activities directly? So being a manager, you need to involving in credit, even though you are not involving in credit. But how many of you all are involving directly credit business? Any idea? Huh? No idea, right? Right. Okay, Ibrahim. Good. Me. Right. Okay. So I got some students mentioning they are clearly involving. Then I want to ask from them whether these sessions are fruitful for them. I want to modify or I want to change my lecture pattern in the next batch. So what are the areas you feel it need to be incorporate to my section other than this, right? Right. There are so many. Right. Okay. Thank you very much. So we see you on next Sunday at the same times, and we'll discuss the balance part of this, and we'll discuss the segmentation and things like that. Not much. It's basically more or less a theory thing, but I try to apply in a real life situation. Okay. Thank you very much. So see you on next Sunday at the 1:30.